Good evening, all. How's everybody doing? Welcome, 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 welcome. This show is the Daily Factor. This is where we look at a universe of nearly 200 high yield, mostly covered call funds, but also other type of distribution dividend plans, and we compare them with each other. Tonight is Dealer's Choice Wednesday. I just picked out a bunch of funds that I like. I just went through the list and threw some in that I liked. And there's others that might have should have qualified, but I didn't feel like talking about them, so I didn't throw them in. It's Dealer's Choice. Anyway, let's look over here at the chart of Bitcoin. This is a daily chart. Let's get it on a little shorter time frame. It's a good looking chart. We broke out over this high, came back and actually tested this lower breakout or whatever. Anyway, held and now up and away. Next important level that I'm looking at, or what I think is important, is this 99 area. It was support 1, 2, 3 times. This last time just for a second, but when it gave way, it led to more selling. So I think getting that back would be important. And then the next step after that is to take back the descending trend line, or I guess it's an ascending trend line. All right. Well, let's look at futures. Then we'll get on with the show. Well, stock index futures look good. Came back and checked the trend line a couple of times. Everything was good. Everything was good here. Next stop on this one is 68 or 6,900, obviously, and next stop after that is 6,950 or something like that. Yeah, 6,952. That'll be get over that, and then we're in all-time high territory. All right, let's look at the NASDAQ. Next hurdle for the NASDAQ is 25.9, and then after that is 26, whatever, 26.2 or something. We never check out the Russell. Let's check it out. Well, the Russell looks a little different. Basically, next stop all-time high for this thing, 25.66. We're at the top of a trading range between 2,400 and 2,500 or something, but we're right at the top of that. But anyway, we'll see what happens when we get out of that area. Hopefully lots of good stuff. Hey, what's going on, Joe? Joe from Nebraska, Omaha, I believe. And we have Chad from suburban Houston, exurbs of Houston. All right, let's get this show on the road. So here is the graphic. Let's start with yield. All right, so like I say, there's no really qualifications. I just put in things I like. So these are all index, or at least based on, I think FEPI's in there. It's either an index or something like FEPI at least, All right, we have WiMAX yielding 76%, but poor NAV return this quarter. NAV down 15%. We have WPay yielding a little bit less, but has about twice as good of NAV return. It's a lot better on a comparative basis because it doesn't have half the yield. It has, it has more than half the yield, but about half the NAV return. So, but twice as good on the NAV return. I mean, you know what I'm saying. Anyway, because it goes different ways. All right. FTQQY. This is from our friends at Granite Shares. This thing's yielding 56, and the NAV return's not great. It's kind of in between WPay and YMAX. Then we have YMAG yielding 52%. NAV return is, and this is on the quarter, down 5%. Of course, it doesn't include the dividend. I mean, this thing's doing great on the quarter, but the NAV not so much. None of the NAVs on these are doing great. Then we have Triple QY. Triple QY is from Defiance, yielding about 46%. NAV is only off 3%. That's the best NAV we've seen so far. Doesn't surprise me. That's a pretty nice little fund there. RDTY, we don't really talk about this one that much. This is from YieldMax. Anyway, low yield, bad NAV return. I mean, compared to Triple QI, it is, right? I mean, I know which one I'd rather have out of those two. Then we have Blocks. Blocks is a good one. But if we're just talking, if it's a good one, but lower yield than either of these two and worse NAV return, especially than Triple QI. But of course, it's based on it's based on Bitcoin, and Bitcoin's in a huge bear market. And it's not only based on Bitcoin, it is Bitcoin. It's Bitcoin leveraged. So this thing has been taking it on the chin for sure. In these other ones like Triple QI, it's based on the whole market. Now, there's plenty of Bitcoin in the whole market, but there's also banks and computer companies and other stuff. But anyway, QDTE, this is from Round Hill, yielding 36%, and we have positive NAV return. Isn't that awesome? Of course, if we get down into the lower yields, we would expect positive NAV return. And sure enough, GPTY yielding 34% with 2.28% positive NAV return. We have XDTE yielding 29, nearly 30%. This one is from Round Hill. NAV's flat. So that one has good old flat NAV yielding 30%. All right. QDTY from YieldMax yielding 29%. NAV's up 1%. All right, we have Eggy. I don't know why I threw this one in there. I knew some of you guys might like it, but that's the thing. I should have probably thrown in EGGQ and EGGS, but I just took the one that yielded the highest. I took my own little selection. Like, for instance, I put in JEPQ, but I didn't put in JEPI, for instance. So this is definitely a curated list. This isn't all this isn't all of them. But anyway, these are the ones I want to talk about. So Eggy from Nest Yield yielding 26, negative NAV return. So then we have FEPI. Now, FEPI has 25% yield and flat NAV. GX. Now, I know this one hasn't been doing well, and this is based on 90 days, or hasn't been doing as well as people are hoping it's going to do lately, but still I figured we'd throw it in the survey just to kind of get used to it. That's not one of you guys texting me, is it? I am sharing the screen, and I just want to make sure. I don't think it was. Yeah, I don't think it was. It wasn't. Okay. Let's see here. But yeah, GX, SDTY. And this space is really crowded. We have XDTE, RDTE, QDTE, SDTY, RDTY, QDTY. And then we have Triple QY that's very similar, WDTE and whatever their Russell product is, IWMY. And then we have SPY-T and QT. And those are all very, and then we have XPay. And some of those have different mechanisms or whatever, but they're very, very competitive with each other. I should just do a max factor of those funds that I just mentioned. Maybe we'll do that next Wednesday night. Anyway, IVVW, I like this one. It's based on the IVV. All right. So XPay. Yeah, I know I haven't always liked this one, but I read the prospectus on it the other day. It's pretty interesting what they do. To get your exposure to stock, they buy a deep in the money option. and they use leverage, or you don't have to put up all the money when you buy an option. You just put up like a fourth of it, or well, one thing is, well, you have to put up all the money, even if they don't use that kind of leverage. You put up all the money, but a deep in the money option, a 95 delta option, it may cost you like a fourth of whatever the stock would cost you. So you have the same up and down of stock through that deep in the money option, and then they take the rest of the money, because you have 3/4 of your cash left over, put it in T-bills, and then they just pay you your own cash. But you have full upside of the stock through the option. But they have a choice. They can either, if the stock goes up, they can either take a profit out of the stock and realize a gain, and then pay the dividend with that. Or they can elect to pay the dividend out of the pile of money they have. Anyway, I never thought about doing it that way. That's not the worst plan, because then I think in that case, what they do is they decide which one's better from a tax benefit. Probably in a market that's been, because it mentions they have a systematic way to do it. I was just thinking how I would do it. But maybe when the market's blowing up, you sell a little bit of options. You just wouldn't sell the option, you'd roll it out. But when you rolled it out to the next month or the next whatever, you would realize the gain and you pay that out that month. But then whenever the thing was down, you could just hang on to it and pay out of your cash. It's not the worst plan I've ever heard of. It's using leverage. It's not free money, but yeah, I like that plan. Anyway, yeah, it's actually pretty smart. Yeah, I never thought about just using the leverage to free up the cash. You could do that yourself in retirement. I wouldn't recommend it. Do it with XPay, because they'll give it to you in a tax efficient wrapper and you don't have to mess with it and everything. But yeah, if a guy wanted to do that, it'd be real easy. Here, let's go check. I know I'm off on a tangent, but that's what I like about these. I know that's not on the screen. I'll put it up in a second. I'll put that up in a second. But yeah, it's not the worst drawbacks in the 2008, 2000. I'm doing a video on it. It's not free money, and it can get beat up really bad. But let's just see what it would cost to do that if some guy wanted to do that himself. You buy a leap, right? You just go out here and you buy a call. Go out a year or something. I don't know. And they use flex options, I think. Well, I bet they don't, because they're just buying they might use flex options, but they don't even do a synthetic. You could also just do a synthetic, and a synthetic you can just cost about a fourth of the money. You could do the same principle with the synthetic, but I think that's part of the strategy. I think the way they do it, they just have two piles of money. They could either realize a profit and pay you that way, or they can just pay out of the cash for that month. But probably when they pay out of the cash, then that's 100% rock. But they have another way when the stock's up. I don't know how they do it. Maybe I don't know. Anyway, let's see what it would cost. So here's a 98 Delta option. It cost $104, but let's roll it out for, let's go out to January of 27. All right, so it's 14th. Well, by then that's only an 86 Delta option. But anyway, my point is you could do it for cheaper than you could buy the stock. Here, that Delta's a 1. That's pretty far in the money. You could go get you the 400 strike call for, call it $300. So it's 30,000, but just buying the SPY normally would type about twice as much. Would tie up 70,000 almost nowadays. So yeah, it saves you. So you'd have half the money left over. Just invest in bonds and just sell a bond to pay yourself. It's a genius plan. It's a good plan. Anyway, all right, Max, you need to try and get a list of the maintenance requirements for these ETFs on your list. 100% maintenance versus 75% might make a huge difference for an investor in the long term. Absolutely, it does. That's a great idea, Charles. Thank you for being here, by the way. SPX near all-time highs, double top or breakout. I think it's gonna go up and at least make a new high and then trap people. I mean, I'm not saying it's going to make a new high but I mean, I think it'll try to make a new high. I think just because it's December and stuff, I think it'll try to make a new high, and then people will get bulled up. It'll probably get, and then people will buy it, and then it'll turn into a bear trap. I mean, that's kind of the bearish case. I don't know. Maybe, I mean, Tom Lee says, if we can believe what Tom Lee says. All right, so let's get on with this. But yeah, but that's a long way saying I'm starting to warm up TextPay a little bit. I'll make a video on it. Like I say, it does have some serious there's some serious flaws with that plan also. But anyway, in any event, all right, ULTY yields more than 15, I think. But anyway, that's fine. NAV return's terrible. It's not gonna make very high on the list, but I guess I have a data problem. It's like it didn't annualize that number. That's probably about a fourth of what it yields. But in any event, I'll check that on my own time. All right, then we do have eggs. I guess I did put eggs on here. Then we have triple QI. This is a good one. Look at this, 13% plus positive NAV return. I put this on there for Marcus. TDAC, it's a good looking one. I mean, positive NAV return, pays good yield. SPY, same thing. NAV's positive. Big Y is a good looking one. NAV's almost up 4%, yielding 11. Once you get in this range, it takes a lot of pressure off the NAV. There's old Tuggin, doing well. K triple Q, JetQ. Anyway, and I put GPIQ on here because I know you guys like that one. Look at all that NAV upside. Look at JetQ. Like I say, JetPi didn't make the cut. RSPA, yielding 9. This is an equal weight SPY. And then we have double QA, yielding about 9 and decent NAV. And then we have SPIN. Look at this one. It only pays 8.3, but out of all of these, it has the best NAV on the quarter. But we have XPay yielding twice as much as SPIN, more than twice as much, but it doesn't have half the NAV upside. SPIN has 7% NAV upside. That's actually not bad. Oh, there's a few more. iSpy. Well, this one's jacked up too. iSpy makes more than that. Anyway, we also have SPUT and triple QX. Okay, now let's go see which ones are the most dangerous. Let's go over here to the, let's rank them by 1 year total return first. See which ones are a 1 year beast. Look at that. GPIQ, Tuggin, K triple Q, and this is everything. This is NAV plus dividend. We have Tuggin, K triple Q, triple QI, up 16% on the year. Big Y up 15.7. Double QA up 14. And this isn't all of them. These are just the ones that have been around for a year. But of the ones that have been around for a year, Big Y, triple QI, K triple Q, Tuggin, and GPIQ are the top 5. GPIX isn't too far behind. Neither's JetQ and neither's SPY. Really, neither's QDT. There's a lot of good quality in that field right there. All right, now let's look at the stable decks. This is the relative stability to the market, to the broader market. SPUT, this is a plan that sells a put option every day, or it's monthly though. So it's like Defiance, but they do daily put options. So it's like a way, way, way less volatile version of Defiance. But in any event, pays 5.91. Monthly options are super steady. I bet Will uses monthly, but Will may use weekly. If Marcus is here, he can let us know which ones Will uses. Marcus is a Will guy. RSPA, I mean, that one gets some of its safety from the fact that it's equal weight. So it's not overweight in tech. So, that's, and it's 16% more stable in the broader market. SPY is about 109 on stability. Of course, it owns the SPY. That gives it 100 on stability. but it sells monthly options. That adds 9 points to stability. It's a 109 on stability. IVVW is a 109 on stability. These are all monthly options. GPIX is monthly options, and they don't sell all of the options. They strategically, sometimes they just sell half or a quarter. Same thing with iSpy, same thing with Triple QI, same thing with a lot of these that do well on NAV. That's kind of their secret, or that do well on stability. So, but then the ones, let's just look at the most dangerous ones. Blocks, WPay, EGGY, TQQY, GPTY, YMAX, ALTI, EGGS, FEPI. And you can see the common theme on the more dangerous ones are the yield. They're, the lowest yield on this list is, well, that's not even real. The lowest yield on this list is EGGS at 14%. So anyway, with the yield, higher yield, generally the way they get higher yield is by using weekly or dailies. Weekly or dailies aren't as steady, and you can see it hurts the stable DEX. Just means they move around. Like WPay, for instance, moves around 3 times as much as the SPY does, at least over this time frame, because it's a 33. It's a third as stable as the SPY. Nothing wrong with it. Definitely nothing wrong with blocks either. I have both of those and like those. All right, so boy, there's a lot of comments in here. All right. So let's just run this back. So I'm gonna knock somebody out at number 1. There's no way spin deserves to be number 1, but just from a math perspective, just from a math perspective, it has the same stability as the SPY, but it's yielding 8, but getting 7 on NAV return. The NAV return magnifies the yield. I mean, but anyway, it's not going to, it is a fundamentally strong, you could do worse with spin or JEPQ. But I'm going to have to give it to QDTE because I'm a little bit of a yield chaser. Look at these guys. You're getting 36% yield, positive NAV return, fairly stable enough. I just like the higher yield, but I guess second runner up might be GPIQ or Big E. But anyway, I just, we'll give it to QDTE. I just think that yield to have that yield and be positive on NAV is impressive, because there's other ones that have that yield and don't have as much positivity on NAV or have negative NAV, like right there and like right there, I guess. But anyway, so yeah, QDTE is the winner tonight. Winner of the Max's Choice. All right, so yeah, I know it. I'm getting better. I'm getting better at remembering to share the monitor. But yeah, no, that Charles, I do need to do that, and that's a great idea. My one concern, I could probably go have AI prep me one right now, but the only thing I would say is it's different at different brokers, and then how often do they change it? But yeah, I could do that. I could do that though, and be able to display the margin rate. It could just be another column. I mean, it would be good for information. I don't know if I would figure it into the formula. I definitely could, but I'm not really, but that's probably that's not my lane. Max, tangent equals cosine is yes. Entire account in Cornerstone at lower maintenance might smash a cover call ETF. Okay, entire account at Cornerstone at lower, yeah, or what about just in cash? But I mean, or just no margin. But yeah, but lower maintenance, I get you. Cornerstone at lower maintenance would do better than any of the really high yield ones at 100. Yeah, I don't doubt that, Charles. I don't doubt that at all. Bitcoin going to make a swing low again soon, you think? Well, all right. Bond says, my kid's Roth has the usual growth stocks or ETFs, VU, Qs, that stuff, along with Microsoft, Apple, Amazon. He has CLM and CRF. That's awesome. Those are all blue chips, 4-star, great companies there. Hard to go wrong with Microsoft, Apple, Amazon, the VUs and the Qs. All right. I like to say that we are a generation. I like to say we are a generation that what made daddy rich ain't going to make its kids. Yeah. Good point. Charles. Yeah. CLM, CRF is within a percent or point or two of beating them or just under, not counting NVIDIA and Planeteer. Yeah. Well, NVIDIA and Planeteer are outliers. I mean, it's, you know, yeah, I hear you on that. But still, buying the Qs isn't an outlier, or buying the VU or whatever, and those are highly benefited by NVIDIA going up all the time too. I mean, you get a part of that through just owning the indexes, but yeah, I mean, but of course, NVIDIA just it's going to beat anything, yeah, on an annual basis. So that's just right there. Yeah, that is a good point, Vaughn. Yeah, you think so? What about energy companies? What about what's going to be the next most disruptive technology? I mean, AI is probably already done, or it's already the bubbles. But what's the next AI? Is it robotics, or is that already too late? Yeah, NVIDIA and Palantir are this generation's Microsoft and Apple. There's probably one that comes out after Palantir that is, I'm trying to think, that maybe some type of DeFi. I don't know, but maybe some type of thing that we can't even conceive of that's an outgrowth of AI and DeFi. You guys probably could conceive of it. I'm just not an old guy like me. All right, 90% of the stock market is owned by 2% of the people. Yeah. Has any info come out on why they got pushed? No. Okay, I was listening to the Wolf Financial Spaces today, and no, everyone on there was asking that, and they're no, that's I don't have any idea. We could go ask Rock if he's seen anything on the internet. But that Josh, the brand manager from Yieldmax, didn't know about it. Or wait, he did know about it. I take that back. But he said they haven't got back to him because of the holidays. He'll call him again. So no answer on that. Based on the Wolf Spaces, I only watched the first 15 minutes. I mean, if they talked about it after that and got it resolved, I don't know about it. All right. So what are you doing, Charles? You're getting into selling put spreads on the XOM. 50 days out, and 30 deltas that's 0.3 deltas. So yeah, I got you. Not at 0.03 delta, not picking up pennies in front of steamroller. 30 deltas like one standard deviation down. You're going to win that like 68, 70, 72, 75% of the time or something, and a lot more because you're probably going to manage it early. What are you going to use? Are you going to manage it halfway, or how are you going to do it? Are you going to roll when it goes in your favor, or defend it when it goes against you? Or okay, anyway, high income earners are always looking to extend life, youth. Yeah, that's right. Some type of life extension, something could be. I mean, I never would have thought. I mean, Eli Lilly's a boring company. They've had good runs before in the 90s when they'd come out the blockbuster drug, and so it's not too boring, but pharmaceutical companies aren't like, but that thing has just gone as exponential as NVIDIA or Palantir's ever been because it's a disruptive technology. It's a technology that's disruptive, or I guess it's the money coming into the company. It's the revenue stream that's disruptive. But man, yeah, so I would have never guessed that would have basically turned into a meme stock, and it would have birthed things like, if it wasn't for Lilly, there wouldn't be Hims, right? Because Hims is just selling the generic version of that stuff. It's a whole freaking ecosystem. Anyway, 70% profit target of credit collected. Okay, yeah, I got you. 50 days out. That's a Tasty Trade way, right? I mean, Tasty Trade likes that time frame because it limits you from a lot of gamma risk. You don't, right? The big moves, the big intraday moves shouldn't shake you out of your position when you're 50 days out, but they will if you're a week out. All right, so Froggy says it seems so odd that that they would up Alti to 70%. Well, yeah, I don't think the stable. They've just, I don't think stable goes into their. But I wonder what their formula is, or maybe it does. But what's their look back period on stability? Wonder if their look back period is 30 days. It hasn't been stable the past 30 days or 60 days, or, I'm saying, yeah, the past week maybe, and it's not really so much stable. It's just that the market's turned around, and so it's lifted the price up. I don't know if really mathematically it's any step. I mean, but yeah, but I wonder what their formula is. Because we were led to believe that it was because it was going under 5, they would make it go to 100. But I do think there's some truth to that the really cheap ones are more likely to get a higher ranking. But yeah, so what the heck, when you split it 10 times, heck, Yomex shouldn't have even split it if there's not going to be an advantage. Okay, but that's at one place. Does anyone else have using margin at some place other than Fidelity, or other than the one that you guys are talking about? I forget who that is. That's 70%. Oh, and Robinhood. Okay. Does somebody have it somebody else somewhere else? And what's the margin somewhere else? I think this is what Bond's saying. Bond's saying I'm in Fidelity lending program, and it's still loaned out at, I can't read that, 4 to 6. Is that a 4'6", 4.6? And that means if somebody shorts it, you get, oh no, am I missing a? Anyway, they did lower the beta of the holdings. Correct. But did you notice though that the dividend didn't go down? I was kind of hoping the dividend would go down to take some pressure off the NAV, or I kind of thought it would because I looked at their portfolio a month ago and it was all stuff like, Astera Lab and all triple digit stuff. And now they have about a third of the portfolio on normal type stuff. So I figured they would go down from 75 to 60 or so, 65, something like that. And it would be healthy and it would have been a healthy thing. But no, they're as of their last payment, they're just paying 75. In fact, that's what I've been, I'm making a NAV, depletion super study, not just on Alti, on all of them. But yeah, that's actually, it's funny you should say that. That's exactly what I've been looking at. I'm making it on all of them, but I'm going through the process the first time on ULTY, but I'm going to be able to run anything through this. And I was just looking back at their dividends. And did you guys remember this case? So when they were monthly, can you guys see that? Let me see. I need to make sure you guys can see that. Okay. Do you see where I have it highlighted in yellow right there? That is when it was still monthly. And then it switched to weekly after that. And the only reason it really matters is because I had to adjust the annualization formula. But I thought I had this averaged. I did have it averaged. But anyway, whatever. But it looks to me like, hang on, let me make it smaller. 113, 103 right off the bat. I'd forgotten about that. They paid some huge dividends, and this is 3, 4, and 5, and but this is also when the fund was getting hit on NAV. This was, spring of 2024, and the fund bled off, it started off like ULTI basically. So maybe that explains part of it. Lots of times when you get beat up on NAV, it means the volatility exploded in one of your things and went against you. But maybe that helped. But anyway, but that could be the thing though. But that the first change they made was to collarize the trades. Still use the same kind of stocks. But so that's probably the reason the dividend was higher during that time period, is because the collars weren't on yet. So they weren't buying protection. But it would have worked if the market would have gone up. But obviously it didn't. Or they had some bad. They aren't really in on the market. They're on individual stocks, and they had some bad ones right off the get-go, and they were unhedged. So so let's look at that. Yeah, so they bled off about 20% of their value in the first couple of months. All right, but then you can see when it starts going weekly, the payments go down. But also by the time it went weekly, or actually I didn't put it on here, but I could put on here when the okay, right here, October 24. All right, so I'm going to turn this like green or something. This is post collar. This is post new strategy. But then I think you can also, once they go weekly, it looks like the dividends go a little lower too. And I don't really think they necessarily should just because of weekly, but anyway, the most recent dividend was 76.7. I mean, maybe they are coming there. I mean, I guess there is a downward trajectory. You know, maybe not from last week, but I mean from last month's. We had 87, 88, 90. And this isn't trailing 12 month. This is if you bought it the day before and you're just yield chasing. You know, you're doing a dividend capture program. That's what it was. That's what the dividend actually paid. So I guess maybe it has been kind of coming down. We'll see. 1 or 2 weeks doesn't make a trend, but here and here it was making, they were paying higher dividends. 85, 85, 86, 87, 92, 85. There was nothing even in the 70s. So anyway, but I'm making a real interesting study on that. I hope you guys like that. 4.6. Okay, that's all good. Well, I figured it was, I thought I had a pixel out because it looked like, I mean, that's why I kept looking. But anyway, you made profit on ULTY from the lending program that you did on the stock. Heck yeah, I'm sure. So they pay you 4.6% and you can let other people short your shares and then you get to collect the interest or part of the interest. I've heard about that. I've never done it. I've heard about that, but I've never done it. But so check this sheet out. Let's see what this is. Can you guys see that? I don't know why there's data missing right there, but it's not that big a deal. The blue line is ULTY NAV only, and this is rolling 1 year periods. So this is each one of these is a year. This first one's a year between, you know, it's the first year it was around. NAV was down 70%, but at the same time, SPY-I is the red line. SPY-I's NAV was down 13%. And the SPY's NAV was up, of course, a little bit. Whatever. You guys could see SPY's NAV goes up, so does SPY-I's NAV. The difference is the dividend. It's always the dividend. That's all it is. Dividend plus a little bit. Sometimes these aren't super efficient, or the dividend minus a little bit. There's a, you know, it's always better usually better just to own the stock. But this top one's IBIT. And really, it looks, I mean, Alti's correlated to both of them, but I think even in a stronger way to IBIT. But you could see the time here that Alti lost less than 50% for the year. Okay, it was in a market where over the same time frame, the SPY was up, you know, it was on the highs at 15, 16, 17, 18, 19, and it was at a time when this index was up. This is IBIT 85%. So sure, when IBIT's up 85% and the SPY is raging also, then you know it pulls everything up. It pulls SPY-I up too. I mean, SPY-I just goes. SPY-I is not going to catch it because of the dividend, but you can. What's 21 minus 6? You go check the dividend that week. That's what it's the dividend. That's all it is to it. So anyway, but it's the same on all of them. So this one is, you know, you can look at Alti when it's down 40 and, you know, and this one's up 60 or whatever. And it was back this summer when it was paying 90 or 100. The difference is just the dividend, the NAV depletion. It's just math. Anyway. All right. You went out. Okay. You lent out gain. Okay. For 31%, you made over 3 times the amount. Wow. I've been reading about that, people loaning their stocks out and stuff, but that didn't used to be around, and I've never seen that option on my Tasty Trade. But maybe I don't have enough money in there. Probably when you get more money or it's when you have a lot of stock, Of course. Of course. Looks like a nice little profit center. So, and I'm going to be able to do this to look at any stocks. I just was looking at SPY as an example of super stable, and ULTY is an example of the other super unstable, just to check the math. But anyway, I'm eventually going to be able to put it all in there so we can look at anything. And then eventually, then I can also see, because you can see how much the stock is, you can see the difference between what the stock should make and what they're actually paying. Because if the distance between what the stock makes and the actually yield they're paying grows, that stock's not as efficient at catching upside. So I'm going to make an index out of it. It's going to, anyway. Okay, Fidelity, they loan out what you want. You have to have 25K, and don't do it in a taxable, of course. Yeah, no, I got you. But it's perfect. It's perfect for a retirement account with a bunch of money in it. I mean, heck yeah, because you could make some pretty decent money. You aren't doing anything with that stock anyway. You don't want to sell it. That's, when you have your non-tax, those are your moonshots that you're going to hold hopefully forever. But yeah, that's great. They loaned out your 3 shares of BITX. So I'm telling you what, your 3 shares of BITX are killing it today. I'm so happy with BITX, I can't see straight. I still can't believe spin won. I need to work on my formula. This formula is too conservative. But I mean, the math does math. I went through and I checked it, and it's doing what I want it to do. So, but it's just not doing what my brain wants to like. I mean, I see this and I say, and I look at QDTE or Big Y, or I look at one of these like GPTY or something. I mean, I don't have to have NAV that's up 7%. I'll take up 2% in a 34, 35% yield, or up 4%, 11% yield. That to me looks more attractive than an 8% yield, but it isn't. I mean, the maths, I mean, it's showing what I want it to. But anyway, so I'm not going to redesign it, but I'm liking these new max factor charts, the way they're doing it now. They don't put the price on there anymore, but the price really doesn't matter. All we care about is the NAV return, the yield, and I like to look at the stability. You can look at the Moxie. Moxie is something I used to do, but look at Moxie. So Moxie is an interesting thing. Markets are like this. This measures the most. This measures the stocks that pay the highest yield in relation to their volatility. I mean, so look at that. Will and Big Y. Those are 2 great stocks. GPIQ. I know that you guys, no one would disagree with me that these aren't great ETFs. Anyway, but that's Max's Moxie rating. We never talk about that. Here's the Quandex. Now the Quandex is basically the same thing as the max factor. I made the Quandex, then I started using its reasoning for the max factor. The Quandex is just the after tax risk adjusted reward. It figures out the tax consequences of the different types of income. There's, capital gains are taxed different than dividends, and it's tax sensitive, let's say. But anyway, on the Quandex, yeah, I mean, the math, on the Quandex, it's, spins the 1, JetQ's number 2. Now, but this doesn't factor it in. This is something I have thought about adding. Charles is saying I should add the margin, and yeah, it should probably. But I think the thing that would even make this a better index is if I added the rolling 12-month return of capital. And so, if something's 50% return of capital or something else is 100% return of capital, I could adjust that to make it even more tax sensitive. Right now, the way I do it is I assume the worst case scenario. I assume that you're in the highest tax bracket. Probably a lot of you guys are, but I assume the highest tax bracket. I assume that you're going to pay like a 25% capital gains versus 22% capital gains versus being in the 40% tax bracket or whatever. I forget what I looked at I studied it. I studied it before I did it, but I looked at the highest tax bracket, and then, but if you get but if one of these is return of capital, because it has the other kind of, your tax liability is generally less, but so I thought about making that, I thought about adding that in, but in any event, it makes a penny a day. I just laugh. Hello, I'm late for the group. Hey, Grumpy, what's up? Grumpy's in the house. You just missed me talking about the tax benefits of the max factor. But no, the max factor just figures out that, because from a tax standpoint, dividend income is less valuable than NAV upside. So, so I figured that, and I figured that into the equation. And maybe that's part of the reason why spin won, because it returned a lot of its return to you in the form of NAV upside. Anyway, all right, Bond says, no, you're going to get screwed. They had loaned out your cornerstone, which is all rock and GC, and that the loaners have to pay the dividend. It comes back. Oh, yes, exactly. You're talking about the same thing, ordinary income versus capital gains. All right, so everyone's in the house. I haven't had dinner yet. Unless you guys think of something else to talk about, I'm going to go get some dinner. Let's see what the market's doing. Man, the Russell looks good. Look at that top there. It's just flat across the top. Breaks out. Anyway, I just like breakout patterns. Who doesn't? Let's see if what the SPY's doing, or the ES. The ES has actually pulled back a little bit off its into the day high. But all that matters is this one. Let's look at Bitcoin futures. You guys going to watch my depletion video when it comes out? It's going to be all numbers and charts and stuff. Anyway. I like to make videos like that. Occasionally, I like to make a video that I want to make, and then sometimes I make one because for the algorithm. Yeah, come on, Bitcoin cup and handle, the smaller cup and handle with it. A cup and then a handle, come on, break out. This is our next target. This is what the bulls need to keep the drive alive. Not that it can't, maybe it'll go down for a day or two and then find more bulls and then eventually, but this, to me, this would be a big deal to get it back up in this upper trading range where it fell out of. That's what I'm looking at. I'm trying to draw this line back here. I did this for a reason. Okay, so let's see where this goes. Yeah, exactly. That's the difference between the higher trading. To me, that's just where I see. All we did was we fell out into the same trading range we fell into in March and April on the chart, on the Bitcoin chart. We just fell back in that trading range. By the time we took it back, then we exploded from 99,000 past the old highs at 116. So now if we take it back, and we go past the old highs and then up again a little bit more like last time, come on, 140K. I'd be all about it. That'd be awesome. That'd be awesome. All right, guys, well, I'm going to get out of here. I appreciate you all for being here tonight. I hope you have a good evening, and I will talk to you bright and early in the morning. And remember, as usual, not financial advice. Consult a professional financial advisor. And other than that, don't forget to like and subscribe. And I will talk to you guys later.